Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, is our guest today. Jeff, thanks for coming in on Friday as well.
Always a pleasure, mate. Always a pleasure.
Now, we're going to take a look at crypto markets first, and then we'll take a look at regional stock markets. Bitcoin is at 21,054. It's up 3.43%. Ethereum is at 1,148.97. It's up 5.65%. Now, looking across the regional stock markets, first of all, New Zealand is closed today for a holiday. The SGX is up 0.27%. And the KLSE is up 0.4%. Shanghai is up 0.55%. The ASX All Ordinaries is up 0.62%. The Nikkei is up 1.14%. The Hang Seng is up 1.71%. And rounding up the numbers, we've got the Kospi, which is up 1.9%. So absolutely sea of green across the region. Tell us why.
Yeah, look, looking at the Kospi this week, it's been extremely correlated to recent moves in the Nasdaq. Taipei to a certain extent as well, and it's up around 1% today as well. It looks like markets are fairly content to follow the stock market rally that we saw on Wall Street overnight. That has actually continued this morning in Asia. Nasdaq futures are up 1.4%. S&P and Dow futures are not far off, I believe, about 1% at the moment. So that's given the markets a reasonable amount of confidence to go into the weekend in a good frame of mind. The reason for the stock market rally is perversely because US bond yields fell overnight, and as markets in the US price in a recession, that means that they believe that the Federal Reserve will have to hike less, that they've got it wrong going into this whole situation. They're going to get it wrong going out. So strange as it may seem, the more that recession risks rise, the more bullish it seems to become for stocks at the moment.
Now, Jeff, what are some key things that you've highlighted in your market commentary today?
Well, I've pointed out there's been quite a large fall in base metals overnight, particularly copper. That's something that we've been seeing going on for a few weeks now. And even the food price indexes, some of these ETF baskets, they've actually fallen over the last few weeks as well. And we're even seeing a few headlines here in Jakarta in the newspapers around palm oil farmers complaining that their incomes are going to take a hit due to lower prices. So maybe it's early doors yet. We may have seen the worst in this food and energy price inflation. I'm approaching that with a bit of caution because although oil prices have fallen overnight and have this week, the backwardation in the futures, so the near-end futures are much higher than the low-end futures. That means there's a huge amount of demand for short-term supplies. Markets are tight. So I'm wondering whether this is an unwinding of speculative positioning across this entire universe, or whether in fact it is actually a turn in the inflationary prices in the market. And I can't really say with any great surety just yet. So I'm approaching these price falls this week with a bit of caution.
So where do you see the risks now in the markets, Jeff?
We definitely need to look at Europe. Now, it's not really been priced in this week, although European equities did fall heavily yesterday. But gas flows from Russia to Germany have fallen to about 40% of normal. The Russians are blaming it on this turbine that's stuck in Quebec. The Germans are saying that Russians are definitely weaponizing natural gas. Whichever one you believe, Germany's had to activate phase 2 of its energy emergency plan. So we're only one step away now from gas rationing in Germany, which would be extremely recessionary, not just for Germany and Europe, but potentially another headwind for the rest of the world as well. We need to keep a very close eye on that situation. Conversely, it could actually be supportive for energy prices globally as well, because if Europe is in the open market looking for short-term supplies of energy, oil's not going down, that's for sure. So for me, we need to watch that closely over the next week and see how that develops.
Now, Jeff, I want to ask you something which I thought was curious that has not really been seen across media. As part of Germany's emergency energy supplies and electricity plan, they've actually, and they started this a few months ago already, starting to reactivate old plants that are coal-fired. And
Yep.
that should come on stream, obviously, just in time for winter. Is that a European-wide initiative, or is this something that is just isolated to Germany?
No, it's not. We're even seeing nuclear. They're talking about trying to extend the life of nuclear plants as well, and not just in Germany, but other parts of Europe. We've seen Denmark, the Netherlands, and a couple of other countries all this week saying that they are either looking to buy coal to reactivate plants, or they will continue to keep running plants that they were going to shut down. They've even managed to get the Greens on board with this in Germany, which shows you just how serious the energy situation is. I think there's slowly becoming a realization here amongst the progressive side, if you want to call them that the energy transition to renewables doesn't involve just clicking your finger and expecting Russia to keep giving you all the energy and we all hug trees. It's going to require a transition period. And in a wartime economy, niceties such as energy transitions have to be put aside. And I think this is the pattern that we're seeing even in Europe now.
So, Jeff, then this will then obviously impact demand for oil.
Yeah, and this is why the price falls this week. I'm treating with with a lot of suspicion, because the actual futures curves, as I mentioned, haven't changed shape at all. They're still very, very backwardated, both WTI and Brent. So I'm wondering if this is just a clean out of extended speculative long positioning across the entire commodity space, and it's not, and it's a bit of a trick for the markets. It's a bear trap, so to speak. And we could see these prices rise once again once we've got rid of this culling of these speculative long positions in the commodity space. So we need to watch the situation in Europe very, very carefully. That will push up demand for coal and for natural gas as well. So it's going to have knock-ons right through the whole system.
Now, Jeff, looking ahead to next week, what are some key events and data points next week that we should be watching out for?
Well, the 1st of July is on Friday, so I just haven't double checked, but I believe we'll get a US non-farm payrolls next Friday. It would have rolled around pretty quickly, but otherwise it's pretty quiet across the data sphere. What we do have at the end of next week is manufacturing and services PMIs, not just from Asia, but from around the world. And I think that will give us an insight into the direction of travel of the global economy. Are we starting to see these slowdowns appearing more obviously in not just in the US or Europe, but in other parts of the world? So I'll be keeping my eye on that. I can't see how that is a constructive environment for equity markets, even if interest rates in the US, for example, continue to move lower. So I think for your viewers, what we can expect next week is lots of day-to-day volatility once again. And I think this is going to be a pattern we're going to see all the way through to the Federal Reserve Open Market Committee meeting, which is at the end of July.
Jeff, as always, thank you very much for your insights and for coming on the show.
Always a pleasure, mate.
We've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Please subscribe and like our various platforms. Thanks for tuning in.